do exercise 10B, appendix B, 1, which will bring us to learning objective 9. Let's see what we have. Recording variances in the general ledger. Wannabe Corporation makes a product with the following standard costs for direct materials and direct labor. We have direct materials, 1.9 meters, that's $6.70 per meter. Direct labor, 0.35 hours, that's $17 per hour. Those are our standards. During the most recent month, 10,000 units were produced, so now we have our output. The costs associated with this month's production of this product were as follows, and you can see we have our materials purchased, our materials used in production. Notice that we have 17,400 meters used, but we purchased 19.5, so we're going to have to deal with some inventory there. And our direct labor. The standard cost variances for direct materials and direct labor are as follows, and I'm not going to write them down. We're going to generate them ourselves. So let's just ignore that and let's go right to what's required. Prepare the journal entry to record the purchase of materials on account for the month, journal entries to record the use of materials for the month, and journal entries to record the incurrence of direct labor costs for the month. So in other words, all the journal entries related to what we're about to do. All right, we can do that. It would be helpful to start with our variances and our costs. We're going to need to know what our actual costs were, what our budgeted costs, our standard costs, etc. So we'll start with materials, and we'll put it in the form of actual quantity times actual price versus actual quantity times standard price versus standard quantity times standard price. Now remember, with materials we have an issue with inventory, so we're going to have to do this step by step. We actually bought 19,500 units at $7 for a total cost of $136,500. Our standard price for the actual quantity we bought was $6.70, so it should have been $130,650. And this will give us a price variance. And our price variance is $5,850 unfavorable, which corresponds with the information in the question. Now, when we're looking at what we put in production, notice you'll recall that 17,400 units were put into production at a standard cost of $6.70 is $116,580. However, given that we have 10,000 units, 10,000 units were our output, we can multiply it by our standard cost. We don't have to worry about standard quantity times standard price. We can just multiply it by the total, which is $12.73. So we'll get $127,300. And that will give us a quantity variance. Notice it's 127.3 came in at 116.5, so it's favorable, 10,720 favorable, sorry. Now let's do our labor variances. And we have an actual quantity times actual price compared with actual quantity times standard price compared with standard quantity times standard price. And we have 2,540 times 1775. The question tells us that we incurred 2,540 direct labor hours at 1775 for a total of 45,085. Well, 2,540 times our standard price of $17 should have been $43,180. So we have our rate variance, and our rate variance is 1,905. Unfavorable, should have been 43,180, came in at 45,85. And let's calculate our standard. We have 10,000 output, and we could have used our cost for labor, is $5.95 per unit. Well, all I'm doing now is I'm taking the standard quantity times the standard price and using the $5.95 instead of multiplying the 10,000 by the quantity and then the price. I'm just using the shortcut way. 59,500, which will give us an efficiency variance of 16,320 favorable. Those are some big numbers, right? So now we have to do our journal entries. So let's start at the top. The first thing we need to do is record the purchase of our materials, 136,500, but we only record 130,650. Remember, it's going in at its standard price. So our raw materials inventory will increase by 130,650. Actually, let me write that out a little bit better so that it's clear. 130,650. And we still have to pay the full bill of what we paid, which is 136,500. So we're off, and we're off actually by $5,850. Well, that $5,850 is right here. What is it? It is a materials price variance. There it is. So there's the purchase of our raw materials. Now we need a journal entry to record the entry into work in process. So what happens? What leaves raw materials? 116,580. So we know that our credit entry for raw materials inventory will be 116,580. What goes into work in process? 127,300 goes into work in process. So we're going to need an entry, a credit entry. Well, this is favorable. Remember, unfavorable is debit, favorable is credit. So there we can put 10,720 to balance this transaction. And this is called a materials quantity variance. Materials quantity variance, 10,720. There we go. That takes care of our raw materials, takes care of our purchases, and takes care of the transfer into work in process. Let's look at our labor variance. That's a little bit different over here. So, labor enters our work in process. Remember, direct labor goes into work in process. But what goes in? 59,500. Remember, standard costing goes in. So, our work in process will have a debit entry of 59,500. But we owe $45,085 in wages. So we have wages payable of $45,085. So we have to get these two columns, our debit columns and our credit column, to balance somehow. Well, let's just follow along. This is unfavorable, so that's a debit entry. This is favorable, so that's a credit entry. So our first debit entry is what? Labor. Labor what? Labor rate. Variance. And since it's unfavorable, 1,905 is our entry. The next one is what? A labor. Labor what? Labor efficiency. Variance. And that is 16,320. 16,320. And if we want to be sure that we did it right, we can add up our columns to see what we get. If we add these two together, we get 61,405. If we add these two together, we get 61,405. So our debit entries total 61,405. Our credit entries total 61,405. We've taken care of each of our actual, our standard, and our total variance in this problem. Now we can do this. We can say, look, we have a total variance, 16,320 favorable, 1905 unfavorable, so we could just take the difference. But when we're doing journal entries, each cell becomes a journal entry. That's 10B1, and that's journal entries. There we go.